Good morning, ladies and gentlemen. Welcome you all to the Q2 FY24 results conference call of Sagar Cements Limited. We have with us from the management Mr. Srikanth Reddy, Joint Managing Director, and Mr. K. Prasad, CFO. We are also joined by Mr. Raja Reddy, he is the Company Secretary. We will now start the opening session with the management, with a brief opening remarks from the management, and then will be followed by a Q&A session. I request all the participants to be on a mute mode during the course of the call. I would now like to hand over the call to Gavin Disa of CDR. Over to you, Gavin.
Thank you, Manish, and thank you for the introduction. Welcome everybody to the call. We'd just like to add that while some statements made in today's discussions may be forward-looking in nature, and a note to this effect was stated in the Concall invite sent to you earlier. We trust you've had a chance to go through the financials and the communication sent along with it. I would now like to request Mr. Srikanth Reddy to commence with his opening remarks. Over to you, Srikanth.
Yeah, thank you, Gavin. Good morning, everyone, and welcome to Sagar Cements earnings call for the quarter and half year ended September 30th, 2023. Yeah, let me begin the discussions with a brief overview of the market in terms of demand and pricing, post which I will move on to Sagar specific developments. Overall, we have seen demand remaining more or less steady across the regions during the quarter. Volumes as well have remained buoyant amidst good demand from housing and infrastructure sectors. Pricing, which was somewhat soft during recent times, has seen some improvement across specific regions towards the end of the quarter. Input prices as well have been somewhat benign, although we did witness some spurt in fuel prices during the quarter. Utilization levels as well remain elevated, reflective of the on-ground demand that, coupled with lower input prices, should result in better profitability and margins for the industry. Going ahead, while the visibility with regards to demand and volume offtake remains high, sustained improved pricing environment is needed to help counter the vagaries of the input and the freight costs. Let me now move on to our quarterly performance. We have seen good recovery during the quarter. Profitability in the previous quarter, as many of you may recall, was impacted by low volumes owing to maintenance shutdown and high inventory costs. Volume growth during the quarter was aided by steady demand in housing and infra projects. Pricing environment, as mentioned earlier, was better on a sequential basis. Higher volumes and better realizations resulted in revenue of rupees 587 crores during second quarter, as against rupees 475 crores during the corresponding quarter of last year, and rupees 540 crores during the sequential previous quarter, higher by almost 24% and 9% respectively. EBITDA for the quarter stood at rupees 60 crore as against rupees 6 crores generated during Q2 FY23 and rupees 31 crore garnered during the sequential previous quarter, higher by almost 955% and 97% respectively. Margins for the current period stood at 10% as against 1% reported during the corresponding period last year and 6% during the sequential previous quarter. Profitability and margin improvement during the quarter was largely on expected lines, as mentioned earlier. Q1 EBITDA was impacted by lower volumes and higher fuel inventory costs. We expect the margin and profitability trend to continue into the second half, owing to benign input costs and better volume growth on account of ramp-up of both Andhra Cements Limited and our Madhya Pradesh and Odisha plants. Also, our strategic initiatives towards increasing the share of green power, usage of electric trucks and wheel loaders, and increased usage of alternate fuels bodes well for rationalization in operating costs over a medium to long-term period. In terms of key operational activities, as mentioned earlier, our efforts are directed towards improving the overall efficiency and ramping up the utilization levels of our recently acquired or commissioned units. Jeerabad and Jajpur units are performing as per our expectations, and we believe we will be able to achieve 80% utilization level for Jeerabad and an EBITDA break-even for Jajpur during the current fiscal. We are also positive of attaining our volume guidance of over 6.2 million during this fiscal. Average power and fuel cost stood at rupees 1626 per ton as against rupees 2062 per ton reported during Q2 FY23. Freight cost for the quarter stood at rupees 848 per ton as against rupees 797 per ton during Q2 FY23. As mentioned earlier, we have seen Some moderation in fuel and freight costs on a sequential basis. Loss after tax for the quarter stood at rupees 11 crore as against loss of rupees 44 crores during Q2 FY23. From an operational point of view, Mattampally plant operated at 62% utilization, while Gudipadu, Bayyavaram, Jeerabad, Jajpur and Dachepalli operated at 87, 60, 65, 26 and 22% respectively during the quarter. As far as the key balance sheet items are concerned, the gross debt as on 30th of September 2023 stood at rupees 1533 crores, out of which 1305 crores as long-term debt. The remaining constitutes the working capital. The net worth of the company on a consolidated basis as on 30th September 2023 stood at rupees 1628 crores. Debt equity ratio stands at 0.8:1. Cash and bank balances are at rupees 152 crore as on 30th September 2023. In summary, we believe that our efforts towards cost rationalization, better product mix, and presence across established and fast-growing markets position us well to create value for our stakeholders. That concludes my opening remarks. We would now be glad to take any questions that you may have. Thank you.
Thank you, sir. We will now begin with the Q&A session. A reminder to all participants, you can ask your question by raise of hands in the participant tab of the Zoom platform. We will wait for the moment for the question queue to assemble. The first question is from Shravan Shah. Please go ahead, Shravan.
Thank you. Are you able to hear us, sir?
Yeah, yes, Mr. Shravan. Good morning.
Yeah. So the first question is, you mentioned 6.2 million volume that we are looking for this year. In presentation, it was 6 million. So just correct me and also help me. How are we looking at in terms of the third quarter and the fourth quarter volume? So last time we talked about 1.8 million, 8 million in third quarter and 2 million in kind of a fourth quarter.
Yeah, Mr. Shravan, the small downward revision from 6.4, we revised it to 6.2. I think there is a typo in the presentation. We believe that we should be achieving close to 1.75 million in the Q3. This is taking into account the election notification in Telangana. And at the same time, we are targeting at doing 2 million for the Q4, Mr. Shravan. So that would be the breakup between both the quarters. So we did close to around 2.5 million for the first half. We are targeting at doing around 3.7 to 3.75 million for the next half.
Yeah, got it. Second, sir, in terms of the pricing, so if you can help us in terms of the from Q2 average. So now, so we understood that in East also there is a close to 50-55 rupees kind of a price hike got absorbed in September, and in South also 30 to 50 rupees price hike is going on. So just wanted to understand from Q2 average, how are the prices in East and South particularly till now, whatever we have taken?
No, I think rather than talking about Q2, let me talk of the exit prices from September to October. Of course, in South, the price increase we could realize only from the second week, though we initiated price increases on 4th to 5th of October, but the real price increases started for us only during the second week onwards, Mr. Shravan. Hyderabad, we have seen almost 35 rupees per bag kind of an increase. I would not call of exit of September alone, but from middle of October, we could start looking at a 35 rupees increase per bag. We are looking at Vizag, almost the price increase is to tune of around 35 to 45 rupees. Bangalore, we have seen around 20 to 25 rupees per RSL. Chennai, we have seen 40 to 45 rupees per RSL. Sholapur, we have seen 20 rupees. When it comes to East, this we could see from end of August itself, we could see almost 30 rupees kind of an increase from September to October, and October we could only get an additional 5 rupees over that timeline. Indore, one of the markets that we have seen, we have seen a plus 50 rupees kind of an increase.
Sorry, sir, Indore you said how much?
Plus 15, sir. It is from exit of September into the October, or at this point of time, we have seen a plus 50 rupees per bag.
50 rupees.
15.
15. Okay. Got it. So now, sir, if you look at in terms of what we were looking at EBITDA of 400 odd crore for this year.
I think that is achievable, Mr. Shravan. So our outlook, we are very clear that we should be very close to that number.
Okay. So just trying to further understand that, because in the first half we did 91 odd crore, so we need 310 crore kind of a number in second half. So
on a 3.7 million, sir, we are talking of around 800 to 850 rupees on a very conservative scale. Given the operating leverages that we have and the current fuel price trends, which we believe current fuel prices might remain more or less flat in our case. With the relation jump, we are looking at around getting 850 per ton on an average for ourselves.
Okay, for second half we are looking at 800
yes.
to 850 kind of numbers.
Yes.
That's great. Second, on the expansion plans, last time we have talked about 3 plans that we are having, and maybe we will be sharing the details in this Concall. So from currently 10 million to 12 million, so 0.75 in Andhra, 0.25 in Gudipadu, and 0.5 in Jeerabad. So any update on that in terms of
we are just waiting. We are just waiting for the clearance from our investment committee, which we should have over next 15 days. Clearance. As soon as we get the clearance, we will be happy to revert back.
But broadly, that number will remain. And
yes, sir, that number would remain. The target is to reach to 12 million by end of FY25, for which we need to initiate as soon as possible. So we are just waiting for approval from our investment committee to share it with all of you.
And even for the date also, though it has increased by close to 120 odd crore in 1H, we were looking at 1200, 1250 kind of a net date for next 2 odd years.
See, I think on the debt, sir, we would remain committed to not crossing on the gross side at 1500 and on net side somewhere around 1250 to 1300. We would not cross those numbers either way. We are committed to keep that number, stay there even with the growth plans.
Okay, and lastly on the capex, sir, 1H we have done 130 odd crore. So how one can look at for this year at least?
Yeah, we only have the maintenance capex, Mr. Shravan. So at this point of time, that is the only approval we have, and that is what we have committed to spend. As we have mentioned, Mattampally went through a very deep shutdown because after 15 years, the kiln and the preheater went through some modifications to handle much higher output of alternate fuels, and also it demanded some maintenance. So that is the only capex that is earmarked for the next 6 months. But for the medium term kind of a capex for which we are awaiting for the investment committee to approve, we would only do the maintenance of the marginal.
Okay. Thank you and all the best, sir. I have questions. I will come up in queue. Thank you.
Thank you, Mr. Shravan.
Thank you. The next question is from Rajesh Ravi.
Yeah, hi sir. Am I audible?
Yes. Good morning, Mr. Rajesh.
Hello.
Yeah. Good morning, Mr. Rajesh.
Yeah. So my question pertains to first the margin guidance which you gave for full year, and this is second half around 850 rupees versus 360 rupees achieved in H1. So what are the cost levers that you're looking at out of this 450-500 rupees improvement in second half? How much of these would be cost driven? And fuel prices apparently seems to have bottomed out. Correct me if I'm wrong.
Yeah, Mr. Rajesh, I think in our case it's a combination of operating leverage. As we have mentioned, we could only operate for we only sold 2.5 million for the first half. Where we intend to sell close to 3.7. That itself should add 100 to 150 rupees overall cost reduction on the operating leverage side. We don't expect major changes to happen on the power and fuel from what we have achieved in the Q2. Reason is obvious that the petcoke and coal prices what went down aggressively actually came back. From 100 again, they came back to 140 to 150 kind of dollars. So we don't expect things to be lot more different. But we may have to review at this point of time. We do have inventory all the way to middle of Q4. But with the geopolitical issues that is happening in Middle East, we would want to keep track of it. But having said that, power and fuel cost, we expect it to remain flat. The balance would come from the realization jump and we, as mentioned, the break-even at both the EBITDA break-even at both Jajpur and Dachepalli have already happened. So given the scenario, we definitely expect the margins to improve to more than double, Rajesh, from the first half.
Okay. So this versus Q2, that 400 extra margin that you're looking at, out of which around 150 rupees is operating leverage driven, and rest 200-250 rupees you're looking at from realization improvement.
Yes, sir. I think that's conservatively is our estimate. So
Okay. And sir, this Andhra, what is the current clinker and cement capacity? 1.8 and 1.65?
Sir, the current Andhra's capacity is to tune of around 1.85 million is the clinker capacity, and 2.25 million is the grinding.
Okay. And this, you are expected to take this to 2.3 clinker and 3 million?
3 million grinding by FY2025, sir.
So 1.85 clinker will become 2.3 and 2.2 grinding will become 3 million ton.
Yes.
Next by next. Okay. Great, sir. I'll come back in queue. Thank you.
Thank you.
Thank you. The next question is from Pritish Chheda. Pritish, please go ahead.
Sir, the incremental 450-500 which you're mentioning, isn't it a bit conservative considering that even if one takes 25 rupee back, that itself is a 500 rupee extra EBITDA per ton?
Sir, that is gross, sir. You have to remove the GST, sir. GST is not...
you're saying at the gross level. Okay. That was my clarification. And the volume that you mentioned in the for the full year is how much, sir?
Yeah, we are talking of 6.2 million, sir.
And you have done 2.5 in the first half, right?
Yes, sir.
Okay. Thank you very much, sir. And what's your peak debt after the expansions?
Yeah, we are talking of 1,500 on a gross side.
Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from Amit Murarka. Please go ahead.
Hi. Good morning, Shrikant. Thanks for taking my question. So, on Andhra Cement, I was just checking the numbers. So the EBITDA per ton seems to be same as Attapalli, but with a lower realization. So, just to understand, like, how come, is it lower cost, or could you just explain those numbers a bit better?
Yeah, it's a more operating leverage, Mr. Amit, because at Andhra we could produce more clinker. So there was sale of clinker along with the sale of cement. So the operating leverage helped us to have a better margin in Andhra for the last quarter.
Achha. So the sales volume that you have mentioned of I think 0.95 million ton. So like that would include clinker or no?
No, that usually doesn't include clinker.
And how much was the clinker sale there?
No, that was one of because as mentioned, Mattampally was under maintenance, so we shifted some amount of clinker. But it's safe to assume that it would be a combination. I would not say included at this point of time. It again depends dynamically on the market conditions, Mr. Amit.
Right.
On the overall revenue it is, but on the sales number we are sticking to the cement sales.
Okay, understood. Okay, fine. And but still, like the EBITDA that is mentioned there, like could you just give a sense about how much of that EBITDA was from clinker sale, just to kind of understand the cement numbers better?
See, I think it's at EBITDA level. Just at EBITDA, we can consider it's not EBITDA, but what percentage of EBITDA is from clinker sale? That's the question, right?
Yeah, right, yeah.
Yeah, I think you should take it half, if I'm not mistaken, Mr. Amit, but we would revert back to you with the specifics on that.
Got it. And the capacity utilization then was about 40-odd%, right? The cement utilization in the quarter, like based on the 2.25 million ton.
You're talking of Concall numbers, sir?
No, this is Andhra. Again, Andhra I'm talking about.
Clinker utilization was slightly more than the cement utilization, Mr. Amit. So we also had to shut down because we couldn't handle the clinker beyond a point, so we had to take a forceful shutdown. Let us look at the full year number, because the first half, as you know, only the Q2 was the full reasonably operated kind of a quarter. August month we actually were very near to 85% at clinker level utilization. But that was only for August, not for October, so not for September. So it is fluctuating because we couldn't handle the excess inventory, so we had to take a forceful shutdown. So that may not truly reflect the operating rates for the first quarter. Full year, our target is to achieve around 0.75 million. I think we are keeping that target for the cement sale at 0.75 million from Andhra for the full year.
Okay, sure. Thank you very much. Yeah.
Thank you.
Thank you. The next question is from Shravan Shah. Please go ahead.
Sir, just to clarify, sir, when we are saying Andhra 2.25, so that includes the Vizag?
No, sir, it doesn't include Vizag grinding.
Okay. And regarding the Vizag land sale, any update? So,
sir, we have time, as clarified last time. We are talking about 18 months. So after that, 3 months is done. So we believe that we should conclude some transaction well within those coming 15 months.
Okay. But not even a broader range in terms of the market value. So you previously mentioned.
We are still getting the government. It's work in progress. So we completed only a small portion of this, or probably out of 4 steps, we completed only 1 step. So we have 3 more steps to complete. So once we complete 2 or 3 steps, only then we will start engaging with potential buyers, because the scope of conversion and everything, we are trying to keep it for ourselves. Before that, we need to get the land records and everything structured, and then convert the land, and then seek the government permission for potential sale. So these are all the steps that are involved. We only completed the record, the bookkeeping and everything to be in order for us to proceed with the next 2 steps. So it will definitely take 15 months is what we strongly think. We will be very happy to come back to you with the status on it once we have crossed each milestone.
But broadly, ballpark, the ready reckoner would be a kind of a 2.5.
The ready reckoner, as we have mentioned earlier, that remains at 4 crores per acre. That remains. So that has not changed from earlier quarters. That ready reckoner is something which we are looking at the government. Government is yet to revise any of those ready reckoner rates.
Okay, got it. And sir, our trade sale for this quarter was how much?
We should be close to around 65%. Because there is a government component. As you know, most of the governments are gearing up for the election, so there was definitive government component in the entire sale. So trade is close to around 65%.
Okay, got it. And the green share for this quarter was how much? Last quarter was 27%.
See, this time it is very close to that number, because I think full operations we will only able to do it in the current in the second half, Mr. Shravan, because Mattampally was under maintenance. So that component remains reasonably close to that. So most of our inventory was used, so that would not have changed. So for the second half, we are talking of close to around 30%. So we should reach to that 30% share coming second half.
Okay.
And even hydropower station generation just started, so that component also will get added up.
Okay. So good morning, Srikanth sir.
Yeah, good morning, Mr. Mangesh.
Yeah. Sir, a couple of questions from me. So firstly, any impact on demand after the price increases that were announced? And secondly, with the elections dates being announced, you feel that demand could turn out to be lower, which would actually drive pricing lower because of lack of demand?
Mr. Mangesh, our experience from past one and a half decade, especially on this price to volume, there has never been a correlation, sir. So I cannot comment much. Secondly, demand definitely doesn't move with the increase in price, sir. I think, as mentioned previously in my earlier calls too, the cement per se would not be a major cost component in any of the construction activities or the end use requirements, sir. Especially on the housing, if you look at low cost housing, it is less than 3%. So luxury housing, it is definitely less than 1%. For most of the infra projects, it is less than 5%. So given the impact of cement cost in the end use requirement, I don't think the price of cement would influence in a big way the demand. Usually it will be a knee-jerk reaction to slow down, just in case if it surges up. But this price increase is not that steep for demand to really contract. In Telangana, of course, the election schedule for two states where we are present is for Madhya Pradesh and Telangana. Telangana, the government influence on the government consumption is limited. So the demand, we have not seen any major contraction so far. Madhya Pradesh, we are watching, so we would be in a much better situation to comment on the election schedule's influence on the demand probably a couple of weeks later. As we speak, so far we have not seen any shrinkage on demand, Mr. Mangesh, either because of price increase or because of the elections announcement.
Okay, thanks, sir. That is helpful. So secondly, on the Andhra Cements expansion, during the expansion, do we have to take a prolonged shutdown from this facility? And if that is so, when would that be?
Sir, see this, we are building a brand new preheater in parallel, sir. So it doesn't demand a major shutdown. At the best, it might need a 30-day shutdown. That is likely to happen 15 months from now. And that can be managed with the inventory management rather than a absolute break in the complete kind of dispatches. It may not really influence the sale. To a certain extent, it might influence some cost-related issue 12 to 15 months from now, but not this.
Understood, sir. And sir, so lastly, if I may ask, so after the increase, have you seen the inter-regional sales, like basically the inputs from other regions increase in Andhra or other regions?
No, fortunately, most of the contiguous regions,
they have also seen the
not the same, but similar kind of a price increase. So that would not really push volumes. But we are just 2 weeks into this, sir. So we will be in a much better situation to understand and revert back to you. Probably it would take another couple more weeks before we could start getting to know the movements, inter-regional movements in the way. But so far, most of the contiguous regions had similar kind of increases. That typically doesn't prompt in a big way the changes in the inter-regional movement of cement.
Understood, sir. Thank you and best of luck, sir.
Thank you.
Thank you. The next question is from Sanjay Nandi. Please go ahead.
Yes, sir. Good morning, sir. Thank you for the opportunity. Sir, what has been the utilization for the clinker for this exit quarter of Q2 on the console?
I think we are close to around 65% at a group level, Mr. Sanjay.
65%. Okay, sir. And sir, the last question is like, what is the average holding period for our petcoke inventory? Like, did we book something when the price was moving at around $110 per ton?
Sir, we do it irrespective of the price. The only time that we held back was when it was at a very, very elevated level. When it was about 200 plus, but now we keep buying systematically. Our historical holding was almost close to 6 months. That got revised to 4 to 4.5 months right now. So we are still sticking to that because we believe there are any changes, we may not be in a situation to get benefit out of it. So we have limited ourselves to 4 to 4.5 months right now.
Okay, thank you so much, sir. Thank you so much. That's all from my side, sir. Wish you happy Diwali.
Thank you. Wish you the same.
Thank you. The next question is from Keshav Lauti. Please go ahead.
Hello. Good morning. So I just want to understand, Andhra phase 2 was expected to start in H2. You more sounded like this year would be more of a maintenance capex only. So whether that would be delayed?
No,
And we
Mr.
are under
Keshav,
expect-
Mr. Keshav, let me again, for clarity's sake, we are talking of maintenance capex at all the places. Investment committee is reviewing the proposal what we have circulated as far as Andhra is concerned. Yeah, that if we get approval, we should kickstart it at the earliest, but that may not lead to huge capex because it's only in the initial phase, it doesn't consume much. It's more to do with the advances, Mr. Keshav. So that should not delay. We are just awaiting for the investment committee to give the clearance. That's what we have committed. At this point of time, since we are waiting for the investment committee to clear, we have committed only for the maintenance capex at the rest of the places. Once the investment committee clears, we would be happy to come back to you with the clear capex plans, but it may be very, very small for the current year. That should not delay the overall kind of a capex plan because we are only going to pay 10 to 15% of the overall capex, the expansion or the modification capex. 10 to 15% is going to be the commitment for this quarter. That may not be much. That's what we have said, and that's what I'm trying to clarify here.
Understood. So broadly, the understanding is the capex would be something like 300 crore. So maybe 30-40 crore might be incurred in this year and balance next year, and this project will be completed by FY25 end.
No, I would like to stick to that, but since I'm waiting for the clearance, we would be happy to come back. So probably we would be very happy to come back as soon as we get the clearance. But it will be broadly in the similar kind of a lines as you have mentioned.
Okay, understood. And Andhra clinker was like 1.65, what I remember, but today you mentioned 1.85.
No, it is always 1.85, sir. Grinding was 1.65.
Okay.
It was limited to 1.65. There was investment made by the earlier management itself of pre-grinder and all, which they did not commission. Yeah, we ended up commissioning that during the takeover and the ramp up, sir. So with that, the clinker capacity remains at 1.85, but the grinding from 1.65 moves to 2.2.
Understood. One last question from my side. What was the Jajpur sales volume in Q2, and are we on our target to achieve 40% utilization for this plant in this year?
So for the first half, we did close to around 0.14 million, sir. Our target is to do 0.4 million, so I think we should end up achieving those targets at Jajpur.
Okay. Thank you. That's it.
Thank you.
Thank you. The next question is from Kritika Vispute. Please go ahead.
Yeah. So there was an announcement yesterday from the exchange to do with EVH resources and some special rights basis, shareholders agreement. If you could throw more light on that.
Yeah, Kritika, can you repeat the question, please?
So yesterday there was an announcement wherein you had referred to a shareholders agreement with EVH resources, and there were some special rights mentioned. So you can talk more about that. What exactly does that?
See, it is pertaining to getting shareholders approval for entering into shareholders agreement with EVH, who has been investor for over 15 years. So we are formalizing the relationship by entering into a shareholders agreement with them.
Formalizing as in what sense?
Yeah, there was never a shareholders agreement between Sagar Cements and AVH. So we are entering into a shareholders agreement with them right now. So they hold close to 19.8%. Right. So we are getting into a shareholders agreement with them.
Okay, and what are the special rights that the announcement refers to?
Yeah, Kritika, can you? Sorry, I missed out. Your voice is very feeble.
Yeah, I'm saying what are the special rights that the announcement refers to?
There are nothing. It is exactly on a similar lines as we have entered previously with the previous large investors like Premji. It's like appointment of nominee directors, and see, we are a listed company, so you know the the things are pretty clear. So it's more specifically formalizing the shareholders agreement with them.
Okay,
Special
got
rights,
it.
but yeah.
Okay. Thank you. Yeah, that was my question. Thanks.
Thank you.
Thank you. The next question is from Shravan Shah. Please go ahead, Shravan.
Sir, just to again clarifying, what's the current total grinding capacity? Is it 10.85, 10 or 10?
It is 10.85. It is 10.85, Mr. Shravan.
Okay. Because it is actually not telling. So that is some.
Yeah, I'm sure there are some small gaps. It is 10.85, Mr. Shravan.
Okay. Got it. Thank you.
Thank you. Anyone who has a question may please indicate by raise of hands. So in the meanwhile, a couple of questions from my side. So what is the current status in both in ramp up of both the plants, both in Dhar as well as in Jajpur?
Yeah, Dhar, our capacity utilization is up of 85%, Mr. Manish. So the run rate is very good, except for the last couple of months where the season did impact. The run rate is up of 85% capacity utilization. As far as Jajpur is concerned, as you know, these prices have improved, and the merger is complete with both these events. We are wrapping up. The capacity utilization is near 50% at Jajpur as this.
See, and in terms of break-even, we
already broke even during the middle of last quarter itself at EBITDA level.
Okay.
We are talking of Jajpur. Jeerabad, of course, it is more than break-even. I think it is into profits. Mr. Manish, and we are also very happy to announce that the Madhya Pradesh government approved the incentives. So it was 40% of the certified capex, which should have been or 150 crores, whichever is lower. So it should have been 180, but since the cap is at 150 crores, so we got a sanction for 150 crore incentive to be paid over 7 years. It will be equally paid at 21 and a half kind of a number per year for next 7 years. We did receive the sanction of incentives also at Jeerabad plant.
Okay, so that's approximately like 200 rupees a ton
slightly more than that number.
Okay, got it, sir. Sir, and in terms of from the demand perspective, can you give your usual commentary on state-wise demand outlook?
See, I think I would rather stick to the south. Demand would definitely be up in a very high single digit, which we stated. The reason why we are talking of a single digit is election notification has come for Telangana. Given that scenario, though we don't expect a major slowdown, but it would definitely impact the labor availability and all for some time. So given that scenario, we believe that the entire south, which so far has moved close to 12 to 13% for the first half, we believe we might end the year with a very high single digit or maybe a very low double digit kind of a number for south. Rest of all the other places, we believe like Orissa would be single digit, high single digit. Madhya Pradesh, we expect again from a double digit, we recalibrated to single digit again because of the election.
Got it. Thank you so much, sir. The next question is from Sumangal Nevatia. Please go ahead.
Yeah, thank you, sir, for this chance. Sir, I joined the call late, so if it is repeated, please excuse me. One is, so on the Andhra Cement, we are holding 95% holding. So what is our plan? I mean, what is the compulsion as far as regulation is concerned, and how do we plan to dilute over the next 1-2 years?
Yeah, the regulation is for us to reduce it to 90% first, less than 12 months from the day of listing. That means we should reduce it by 5% before April 24. And within 3 years' time, we have to reduce it to 75. And we are bound by those regulations, so we would invariably fulfill those obligations at the right time.
Okay. And any initial thoughts as to what is our preference in terms of route
See,
of
our approach
dilution?
is not to sell Sagar shares, but to go for a capital increase. As we are a growing organization, so we believe that there is capex and there is a requirement. So we generally don't go for a very high leverage. So we would like to balance that. So our preference is to go for a capital increase at Andhra for this complying with the regulation. So that's clearly stated. Yeah, we should initiate probably a month and a half from now about looking at those options. At least we want to complete the first step first. So we should start the work pertaining to that over the next couple of months. We are more than hopeful to fulfill those things ahead of time from a regulatory compliance perspective.
Got it, sir. That's very useful. So second question, I mean, at a 12 million ton capacity, what sort of maintenance capex should we expect? And next year to reach to 12 million ton, what sort of capex broadly for FY25 are we looking at?
Yeah, Mr. Sumangal, pertaining to reaching to 12 million, the capex we would revert back to you, except for the maintenance capex. Yeah, we are waiting for our investment committee to clear the capex plan. So we are expecting any time now. So as soon as we get, we would be happy to share that. From a maintenance capex perspective, when we reach to 12 million, sir, we should expect 50 crores per year on an average.
Got it. And sir, last question, given that this year for Andhra we'll be at less than 1 million tons volumes and with a capacity of more than 2. So next year incrementally could we look at another year of very strong volume irrespective of a normalized year as far as industry is concerned, given a very low utilization both at standalone and Andhra?
Yeah, Mr. Sumangal, the current year, the outlook is to do 0.75 million from Andhra for the current year, because we only started during the Q2. The operations genuinely started only in Q2, so we only had 3/4 of a year. Next year, we expect the volumes to move to anywhere between 1.25 to 1.5 million. So we would be doubling at Andhra from 0.75 outlook. Our target is to achieve 1.5 million for next year. So that adds up along with the ramp up of Jajpur. So rest of all the other assets, we believe that we should be doing very similar kind of a run rate, given the next year is going to be a big election year, both in Andhra as well as in the central government and some of the operating areas we do have the election. So given that scenario, yeah, we believe the other assets other than Jajpur and Andhra Cements to perform exactly like this year. We do expect volumes to slightly be more relative to this year from Andhra and Jajpur.
Okay, so ballpark 7.5 to 8 is what we should pencil in for next year?
I would be around 7.5 million on the higher side.
Okay, got it. Okay, thank you so much, sir, and all the best.
Thank you, sir.
Thank you. The next question is from Rajesh Ravi. Please go ahead.
Yeah, hi, sir. So this incentive from MP government, this will be a capital subsidy or will it flow through P&L revenue?
It will go through P&L, Mr. Rajesh.
And this is irrespective of volumes, or it is?
It has nothing to do with the volumes, Mr. Rajesh. It is to do with the capex, but structured in a way where it will go through P&L, so it is irrespective of volume. This fixed 150 crores to be paid over 7 years. So it's going to be a lump sum 21.5 kind of a number for each year, irrespective of volume.
And you will start accruing this Q3 onwards?
Yeah, we should start accruing from the current year onwards.
Rajesh, we are going to account based on the receipt. So
based on receipt, okay, that's
yes.
Great.
Whenever we are going to realize the money, then we are going
to. Okay. There's no accrual you are following over here.
Yeah, and for the disbursement, there is a limitation on the capacity utilization. So yeah, the limitation is that 70% capacity utilization. If suppose if it is below 70%, proportionately they are going to
organize the
Okay, okay. And that will be paid off later when the utilization.
Yes, sir. See, 150 is fixed. It has to be paid over 7 years. So,
okay.
The indication is that we have to operate at minimum at 70%.
Okay. And sir, this volume guidance 6.2, first half we have 2.5, which you have done around. If I remove the Andhra, which is around 2.4 million, and next 6 months you're looking Andhra to volumes to contribute another 0.65 million. So, ex Andhra, the remaining assets like the standalone, you are not looking any volume offtake?
Sir, we should be cautious in. We stated that even before Mr. Rajesh that the existing assets we only factored in 2.5 to 3% kind of a growth. So that remains at that level. Given there is that small supplies that have come into the regions that we operate, and the demand is likely to grow only in single digit. So we have penciled in not much of a growth for the existing assets. The bigger ramp up is happening both at Jeerabad as well as Dachepalli. In the coming second half, we are expecting a 1 to 1.1 million to be contributed by only these two units.
Yeah. Okay, sir. And just one last question. When we see the standalone, the two subsidiaries performance where they have reported almost 700-800 rupees margin, is it that most of the fixed cost is getting reflected in the standalone entity that would have also benefited the other two entities?
No, sir. I think what you should understand is the Mattampally, which is one of the largest in the standalone, was for maintenance. So first half is one-off kind of an event that has happened, Mr. Rajesh. So but for that, I don't think there is any anomaly in it. I think operating leverage is across. So once we do better, I think the spread is going to be equally impactful. Andhra is an exception because Andhra, we had clinker sale and cement sale, and most of the footprint areas of Andhra remains in a close proximity. So the realization is a lot higher. But for that, I think it is across very, very.
Okay, so just one follow-up on this, because if you look at this Andhra, at such low utilization, they have delivered healthy margins, and when you're looking at much higher volumes in the second half, obviously we'll have a better operating leverage. And
yes, sir. I think that is one of the reason why we are talking of almost three times the number for second half compared to the first half.
Correct. And the standalone where you had maintenance impact in the first half, even that should be.
Yes, sir. I think this is what is making us be very clear about the outlook when it comes to margin, Mr. Rajesh. Along with the realization increase, so we did factor around 100 to 150 rupees to come from the operating leverage itself, because we don't have any major maintenance issues or this thing that is likely to come up for the second half. So that itself should help us add up 150 rupees on cost side, or rather reduce 150 rupees from cost side, which should add up to the margin. And the rest is what we are expecting from the realization increase. Rajesh, for this.
My thought was that would not the operating leverage and the cost benefits would be much higher, given that both the standalone
Sir, we are in cement, so I need to be cautious because we need to factor many things. And we are into the election year, so any notification or any of that, and at the same time, geopolitical issues would always impact the power and fuel, which is very, very sensitive to those events.
Great, sir. Thank you and all the best, sir. Thank you.
Thank you, Mr. Rajesh.
Thank you. The next question is from Vishal Periwal. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, now cement demand, since it has been strong and now we have taken industry-wide, the price hike has also happened. Historically, given your past experience, has both these things gone parallelly for a consistent period of time, or one comes off after a brief strong seasons?
Sir, again, I have to go back and give you a historical kind of an impact. Over last 13-14 years, since the south supply has been 2x of demand, we have seen price increases coupled with reduction in demand. Sometimes we have seen price increases with increase in demand. So we have seen various permutations and combinations. There is never one single rule that was applicable. But there were instances where price increase was coupled with increase in demand. So nothing can be ruled out in our.
Okay. So for absorption of this price hike, typically you will wait for how many weeks to say that, okay, things are sustaining?
2 weeks. Typically we have to wait for the 2 weeks, which we just completed. So that's what makes us think that this price is at least would sustain in the present shape. Though this hike is not the highest, I don't think we are at such high prices that we have seen in the past. Most of the people are excited with this price increase, but I think this price increase just manages most of the cost from small single digit EBITDA margin. I think we will be reaching to 15%, sir. But the real requirement is up of 18% EBITDA requirement for all of us to survive and service the stakeholders. There is a gap, so we believe that prices still have to move up. But we have to, since for last year and a half to 2 years we struggled to increase the price, so we would want to go cautious on these issues. And coupled with the election, if this current price increase sustains, it would give some relief. But this alone is not enough. It should go up further by, in our view, another 2 to 3% at gross level for industry to have a reasonable margin for it to sustain and service all its stakeholders' aspirations.
Okay, yeah, sure. That's all from my side, sir. Thank you.
Thank you.
Thank you. The next question is from Shravan Shah. Please go ahead, Shravan.
Sir, this incentive on the MP. So first, to clarify, do we have any other incentive apart from MP which we currently are booking or likely to get?
Sir, we only book on receipts, sir. We have quite a few incentives that needs to come, so none of them are booked. Like especially in Andhra and Telangana, where we have close to 75 to 80 crores of receivables from the government as incentives, but that has been due for over more than a decade. So till we receive, we generally don't book. So other than this, 150 crores is available from Madhya Pradesh. That also is due over next 7 years.
Yeah, and there, just to clarify, we are looking at close to 0.4 million ton volume this year.
No, sir. Sir, in Madhya Pradesh, we are looking at 0.8 million. The target is to be at 0.85 million. So I think we should be fulfilling the target there in Jeerabad. So we did for the first half, we did more than 0.37. So for the next half also, we are looking at slightly more than this number at 0.45 million or a 0.5 million. I think that is definitely achievable there.
Okay. Got it, sir. Thank you. I mistakenly took the number for Yeah, got it. Thank you, sir.
Thank you. The next question is from Rajesh Ravi. Rajesh, do you have the question?
Sir, yeah, my questions are all over. Thank you.
Okay. Thank you. So, as we don't have any further questions, may I hand over the call to Mr. Reddy for his closing comments.
Thank you, Manish. Yeah, we would like to once again thank you all for joining us on the call. I hope you have got all the answers you are looking for. Please feel free to connect with us at our team in Sagar or CDR. If you need any further information or if you have any further queries, we will be more than happy to discuss with them. Thank you again. Happy Dussehra and happy Deepavali. Thank you, sir. Have a good day.
Thank you, sir. We now conclude the call. You may now disconnect. Thank you.